So how far away from that tipping point? Let's call it, the recession and whatever that looks like. We don't know what blows up, what happens, but that whole recession scenario, how far are we away?
I mean, I wish I could give you a brilliant answer. Is what we are much more, we're microeconomists, okay? And we'll use conservative macroeconomic assumptions against us. So high growth if we're short, low growth if we want to be long, and see if there's a balance sheet that has a real margin of safety in that environment, especially relative to pricing. And we'll make investments based upon that. Is we know that China is starting to really try and incentivize their economy again and stimulate. Okay? And they're the behemoth in my world. Okay? And so they're not getting much traction yet, and it's tough to separate how much of that is economic, how much is COVID and the like. But China is over 50%, steel demand, copper demand, And so what we were actually a little worried about prior to the invasion is we could see them starting to move again to become a little bit more stimulative, and the West was going so strong. We've never yet been in an environment for commodities where both were strong at the same time, and there isn't enough material to handle that, okay? And so the aspect of a country that has phenomenal foreign exchange reserves, has commodity reserves in a number of materials, and can they actually start to stimulate as we're dealing with the retardant effects of interest rates and high commodity prices? And then I also don't fully know how the situation is going to play out with flows of stuff out of Russia. Okay, and so the answer is it unfolding as we speak? Is it second half? I'm really unsure about that macro environment template. My tails are much fatter.
Yeah, and I can't tell the timing. I can see it in the forward-looking economic data that I look at. It's happening. How fast and how severe yet? Not clear. Obviously, the yield curve has told us well in advance that, listen, you need to be wary. And I can't tell whether it's the next 6 months or the next 18 months. Do you see it in any of the data points you look at in the micro? Are you seeing demand destruction anywhere yet?
You're starting to get some elastic demand. We see it in some gasoline numbers where you use a rolling 4-week average. You're running about 100,000 barrels a day weaker. Not huge, but just you see it a bit, okay? We're definitely seeing different aspects in physical material demand because of the shutdowns of the auto production lines, because they can't get the wire harnesses from the Ukraine factories, and or chips, and or China shut down in parts in COVID. So there's small areas where your physical metal is a little bit weaker than you would think within this background environment, especially given some of the supply interruptions. But it's more an aspect of marginal weakening from a point of real strength, okay, that's caused by, and it's very auto-centric, rather than something that at the moment is more broad-based. And so given the uncertainty over how China will come back in terms of COVID, supply chain, economy, demand, some of the other parts being made up of supply chain problems from Russia, Ukraine, and the like, we're not sure really how to model in terms of some of these specific materials. And also how are they going to handle the Russian gas and European power, and what that means for zinc smelters, for aluminum smelters, and that supply and the like. And so the answer of constrained supply and impacted supply, pockets of demand weakness tied much more to automotive than anything else really at the moment, and how that'll play out 3 to 9 months forward. That's why when you started, I wanted to be clear that this is, in certain areas, a much more uncertain time.
It is. It's one of the more complicated macro environments I've ever seen, in fact, or I've ever certainly worked through. And I've been 32 years doing this. And this is complicated because there's so many unknowns. We just don't know what's happening.
But what I would say is there are things that are going to be playing out regardless. And so we've touched on agriculture. And so unfortunately, you've created enough tightness there that you're going to need higher prices to ration demand. And here, at least, while we're still through the old crop, until we actually see, do we have bumper crops in the Northern Hemisphere or not? You do know, we had sanctioned 18% of the world's potash demand, supply, from Belarus before the invasion. Okay? We've now lost 35 to 40% of the world's potash supply by having Russia and Belarus cut off from there. And so that nutrient shortage of nitrogen, phosphate, and potash that you're caused because of the impact to natural gas and fertilizer plants, ammonia and energy for phosphate, the shutoff of potash. We know that we're affecting the agricultural yield as well too. And so even in good weather, you're not going to get optimal yield, especially for the next growing season. And so that's an area of sustained above average pricing and profitability for certain segments almost inevitably at this point. So, just because it's not something that is economically cyclical in terms of demand, and we've already affected the supply. And also when you get into something such as crude and what's gone on there is what we've just done, in our opinion, when we take a look at everyone pulling out of Russia in terms of the service companies between the major producers, is Russia was an area that we had modeled in forward crude oil supply growth. Okay? We think that you've now created sort of a structural decline. And so you will lose, let's say, 500,000 barrels of productive capacity by the end of this year. And basically, if they were going to grow 3+% a year going forward, our current model is we have them declining 3% going forward. Now, that's assuming the phenomenal engineers, that they're able to keep things going much higher and longer. We're giving them real credit to keep a decline of only 3%. But in a world that was going to be short capacity and supply already, and where a normal economic recession doesn't create a huge fall in oil demand, like copper is your most sensitive commodity, okay? That aspect of taking one of the few areas of growth to an area of decline is massive.
Okay, copper quickly, it's been going sideways for a year or so. Why is that? Was that because China was slow?
That's a large part of it, yes. I mean, just we've pulled down inventories. It's hidden a tightening situation. The Western world is tighter. Physical premiums are tighter out there. Inventories generally in the chain, barring some customers, are lower. And at the moment, relative to the strength of the dollar, concerns over the economic cycle. China is weak right now. Is that aspect of the generally tighter physical market, you've not had accelerating demand. If we get back to some sort of resumption and China's coming back, then copper prices will shoot to new highs.
Yeah, it feels that, let's say we've got economic weakness, copper usually falls in that environment, or at least precedes it. It's Dr. Copper's pretty good at that, but it feels like that's one of the ones to buy because we know the answer is there is a massive expenditure going on using copper for stuff.
Don't get me wrong. If we have a real true interest rate and energy price driven recession depression, copper prices will fall from here. These are exalted levels, okay? But that is a industry where we always look at commodities and see, do you have an accelerating rate of demand growth relative to GDP? Okay? And for decades, because of thrifting and substitution, because of most expensive base metal relatively, copper's had a falling intensity of use. We hit an inflection point in the past couple of years here because of what we're doing for our electrical infrastructure, renewable energy, electrical vehicles, data, you name it, everything's gone in, where you're now at accelerating rate. You have accelerating rate where you have impediments to supply in Chile, Peru, falling quality of supply. And so that is an aspect where it's a question really of when will copper be greater, because it's great now, okay, not if.
I just want to go back to the concerning thing about the food crisis, which is, you would say, a reasonable probability, right? This is not good. These kind of outcomes are not good. Where does the shock lie in terms of which countries suffer the most here? Is it kind of Egypt and around that zone? Is it Africa in general? Where is it?
It's basically the band you're talking about, sort of that central to northern Africa, running through Middle East. A country like Bangladesh, will feel it. Pakistan, they try price controls, but they still have the issues with their net importer and how long can they subsidize or manage. You can see what's going on for them in their sugar industry. And so, that band pretty much as you run from, the left of Africa, central and northern, all the way through over to Bangladesh in that Central Asia area. Afghanistan will suffer horribly. There's countries that could probably afford it, but like Mongolia used to get 95% of their wheat from Ukraine. That can be substituted from Russia. They will. That's but an area elsewhere can't. Okay, like Lebanon or Egypt and so that's going to be the area where you have the greatest energy, but especially food crises. Now, the one thing that's a little bit overplayed is when you've had mass disturbances like an Arab Spring, you've had phenomenally high food and energy prices. That's true every time you've had those larger, not every time you've had food prices explode, do you have disturbances and uprising. So you need one as the sort of to create the underlying, gasoline, but it's not always the match.
The other country that is a massive importer of everything is Japan. Now, Japan's interesting. I mean, the currency is in free fall right now, which is fascinating. Yield curve control. So they're basically printing into a inflationary situation. Obviously, the currency has to collapse. How does they play into all of this?
The lazy answer for you is that for a declining population, declining demand country that's wealthy, okay, we've not seen massive structural changes either in their supply or demand of materials. So have there been issues where there's idiosyncratic events where they shut down all their nukes and all of a sudden, they come back in for LNG and coal and crude because of that event? There's been shock issues, but relative to the economic cycle and like is the country is wealthy enough and is also owns a phenomenal amount of assets. Like you look at what Mitsubishi and Mizuho and all those Marubeni own abroad and their share of coal and oil and iron ore and there is some balance overall in terms of their ownership of supply assets abroad coming in. That balance is, what you would think of normally for an import-driven country. So we don't at the moment model anything there other than continued sort of structural decline as the population ages and falls.
Yeah, the only accelerant I think they could be in this equation, obviously it's interesting because if food prices and commodity prices keep going up, we've got this yield curve control, we've got a falling yen that rises the dollar. It's kind of all of this messy macro loop, which is great for us macro guys, but usually never good outcome for the world. But my guess is it should accelerate their nuclear plans again.
Yes, it should. But I'll come back to an interesting point that you touch on, which is we're talking about the short term here. We're talking 2, 3, 4 years. Yeah. And all the concerns and that we need to make it through it, geopolitically, country, and deal with the human plight that could occur during that time. Our view, as you roll forward to the tail end of this decade, is actually much more, especially when it comes to food, deflationary, okay, than it is inflationary. Now, there is some question in my mind of how and when do Belarus, Ukraine, and Russia get reintegrated into the food supply world. That 25% of the world's black earth is Ukraine. There, we've talked about they're third in corn production. You can go through everything that they are, and so we hope for them and for everyone in the world that you can get peace and stability and planting and economic growth there in the near term again soon. So if I assume that at some point Ukraine, Russia, and Belarus reintegrate into the agricultural world trade economy, then when we take a look at, we believe gasoline demand is going negative, by the tail end of this decade. So I have negative gasoline demand. One of the larger drivers in terms of how it's all connected, because ethanol and gasoline calories completely linked. It is a gasoline calorie. Over 40% of the U.S. corn crop goes to ethanol. If you take a look at sugar in Brazil, it's the flex of what sets the sugar price is where's ethanol and where do I do that substitution. Okay? At the same point, we have a aging world. Okay? Aging people eat less protein. They have different diets and falling population. We think people's forward population estimates, 15, 20, 30 years forward are overstated. Okay? All of them have resumption. And so when we get into the second, we're also huge believers in the productivity growth. Like we spoke about engineers for energy. What's going on, the innovation, both in terms of environment, cleanliness, efficiency, everywhere in the agricultural chain, because the structural difference of agriculture as a commodity versus crude oil and metals is every year you get more on average in agriculture, okay? In metals, you have decline or depletion. Oil, you have depletion. You have to find more, produce more. Every single year on average, weather adjusted, an acre grows more. You can't get real pricing. I'm more productive per acre. I waste less. I convert it in terms of like when it gets fed to a fish or a chicken or pig, we're getting more efficient at converting that. We waste less in the food chain. And as the population shifts, so China already consumes more protein per capita than South Korea or Japan. You're not going to get a wealth effect of more protein there. If anything, we think you're going to get less as they switch away from a pork-dominant diet to something that's more balanced. The area that is really going to be growing protein is India. They ain't eating beef, okay, which is the inefficient source, okay? They're going to be eating the much more efficient, aquaculture and also poultry and that sort of a diet to get their protein. And so when we look at the productivity for agriculture, South America, the US, we're adjusted. We look at the change in diets as you age and decline for the wealthier parts of the world and the aggregate productivity curves. We think that you're facing much more in the second half of this decade, sort of falling agricultural prices and much cheaper food once we get through these horrible series of events.
It's a really complicated world out there. We've got massive inflation, recession fears, war in Europe, COVID, China issues. What the hell's happening? Everyone's got an opinion, but who's right, who's wrong? As co-founder of Real Vision, I've got my own view, but maybe I'm wrong too. And I want to go and find out more from real experts, real in-depth analysis. And I've hand-chosen my experts for this 2-week journey of discovery in global recession. Is everyone wrong? I've chosen people like Peter Zeihan to talk to him about geopolitics, David Rosenberg about the economy, and Pierre Andran, the world's most famous energy trader, about how to navigate the oil markets and where it's all going. This starts on May the 2nd. And I'm going to learn so much about what really is going on and how to best navigate it. Yes, not everybody's going to be saying the same thing, but it's going to allow me to piece together an investment framework to navigate these complicated times. Now, normally we'd give you a 7-day trial for $1, but because this is so important for all of you, and I think it's one of the most important pieces of content we've ever done, we're extending that free trial for 2 weeks for $1. So you get the entire campaign of all of these great minds. And it's only $1 for all of this. So just go to realvision.com/global recession to find out more and join me as I try and figure out what the hell's going on.